Hi everyone, it's been a while since we are back to this weekly market update once again. So this time round, we'll be sharing a couple of few things. We'll also update what happens on this current uh, for the past 1 month or past few weeks of what happens to the market itself, and then what happened to last Friday closing as well. So before we start, just want to let you guys know that last Friday you can see that there's a huge market movement for most of the market. It's because due to last Friday is actually a quadruple witching day. Mainly what is that about? Is of this thing. Let's show you guys. All right, it's basically there's an expiry date on the index options, stocks options, and those other classes of options as well. So because everything expires on the same day, that's why during this period of time, right, there will be a very high volatility on the day itself. That's why you can see that there's a high volume trading on that itself, and usually market will tend to be closed, at a rate at the bearish side. So you see during that day itself, you will witness heavy trading volume. All right, so this is the part due to offsetting the existing futures contract itself. So that's why you can see what happened on last Friday. How come there's a surge in the volume? All right, you can actually Google it if you are keen to find out more. What is this witching about? Correct. So last Friday, beside that, there's a sell off. If you guys have been paying attention, you should know that what happened to Fed meeting for the on I think it's on the Wednesday itself. So they actually mentions, they bring forward, they mentions that they are seems like they is going to announce for reducing the QE, the bond purchasing program. So they might going to start reducing and to cut it maybe until earlier next year, as you can see from here. So all right, so you see Fed is going to announce the QE taper again. All right, so in August or September this year. But they are announcing doesn't mean they are cutting. It's just the market right now is pricing on this news coming out from them. All right. So actually a charting to say that when will they announce? A lot of analysts or the poll actually say that they might announce during the Jackson Hole meetings. All right, Jackson Hole conference meeting, which fall in I think it's on August or in the September. I think it's a late August, early September. So this is where they will announce will they taper on the bond buying purchase program or not, and then when will they start taper it? They will also announce. All right, some people might be looking at in the start of 2022 to start taper it. So this is one of the concern. And beside that, right, also they Fed at the same time also announced, I mean, they said that they will have two rate hike to their 2023 forecast. All right, whereby before that, right, there is no forecast saying that they would hike the interest rate. All right, but due to inflation, they might have to do so. So all these news came in last week, which caused quite volatile on the Thursday and Friday. But as we can see that from the market perspective itself, right? For the first, I think Monday to on the Monday to Wednesday itself, the movement of the market is very, very lethargic, very, very slow. All right, it's not have great huge movement until the Fed meeting. We give a much clearer direction where the market are looking at. That's why market actually dropped quite huge on the last 2 days ago. So this is what happened to the market itself. And not only that, when we are talking about interest rate increase, right, there are a couple of things that might actually cause the market to drop. All right. So not just that, it also cause people shift into the value stocks instead of the growth stocks. Why? Because when we're talking about interest rate increase, right, it does actually damn the growth company balance sheets. All right. So it's not going to perform well. So they right now those institution investor, those bank, they might actually shift their focus or do a rotation cycles rotations, rotate into the value stocks, find those intrinsic value that are way below the market value at the moment. All right, that's why you can see there's a spike in the value stock. So what is value stocks about? Value stock is typically talking about those mutual matured business. All right, those steady growth rate. All right, those have stable revenue, stable earnings, pay good dividends, um, that those kind of company, like big company like Berkshire, like Johnson and Johnson, this kind of company instead. All right, this is called value stocks. So growth stock is like those tech company that they actually price their forwards earnings to current price during they can use the discount cash flow models to derive what is the intrinsic value if let's say the interest rate remain the same. But because if let's say you know what is discount dividend discount cash flow model, right, you should know that when the interest rate hike up, the intrinsic value will actually lower down, and that is why people actually growth change to the value stock instead. All right, so DCF, discounted cash flow model. All right, you can Google it. You should see the formula. Increase of interest rate is not very good for the growth stocks on the intrinsic value calculations. So next, beside that, higher interest rate also weigh on the commodities and also cause the dollar to actually hike up. All right, as you can see that, I think I will show you guys in the chart later on some of the commodities and also what happened to the dollar. Actually, the dollar surged even higher, and also most of the commodity drop. But commodity drop is definitely due to interest rate, but also it's because of this news. Actually, China, they know that they want to stabilize the commodity price, so they actually release. Right, they release those copper, aluminium, zinc reserve to the market. So main uh this main point is actually to cool down the hot metal sector, so not to let the price to surge to all-time high. All right, that's why they want to cool down the market. They have to release their uh, reserve instead. So this is one of the news. As you can see, that copper I've been dropping, I think quite a few percent, 5 to 6 or 8%. We will look at the chart later. Right, that is what I've been looking at. So not only that, let's see, when we talk about interest rate hike, right, also got one of the sector you guys might want to take a look, is actually the utility sector. Utility sector. I will share you guys with the chart right now. Okay, so let's take a look at what happened to utility utility sector. So you can see that utility sector for the past last Friday itself, right, it has a huge drop, or since Wednesday after the interest rate announcement, they are going to hike. There's huge starting to drop already. Why? If let's say you Google, right, you just have to simply type how does utility stocks be affected by the height of the interest rate. You can see that when we talking about, because utility is used to be a uh safe haven sector where interest rate is low. People want to have a fixed dividend payment from this kind of utility company, then they will go into it. However, utility firm can be adversely affected by the raising of the interest rate in two ways. Why? One, if let's say interest rate hike, okay, it makes the bond look more attractive. But because utility is actually a very high debt sector, they need lower interest rate to make their company earn more money. All right. So if let's say you increase, you see over here, you say that financial crisis after 2008, resulting a zero rate interest rate environment. This make the utility company benefited by drawing attentions of many conservative income focused investor. All right. So their dividend paying will be very good at around 4.8%. But if let's say interest rate increase, all right, this is a debt instrument begin to increase. Utility will likely to lose investor to the bond market because they will shift to the bond, right? When the interest rate hike, they will shift to the bond, and they're not sure whether a utility company able to sustain their debt financing or not with the height of the interest rate. So it caused uh the favorisms on the utility sector and cause the market to drop. So if let's say you have Google some of the utility company itself, right, you can see that most of the company shares actually plunged on last Friday. Let me show you guys one of them. You can see. So with the increase of the volume and the drop of the company itself. All right. So this is on the utility. All right. So let's start from the index itself instead. So let's go to the Dow Jones. What happened on Dow Jones itself? So you can see that there's a great drop. If let's say you put in some indicator, you can see that what actually make the drop might be due to over. Let's look at technical perspective. So I just want to bring out RSI. All right, we can see that the market is going all-time high, has been trending on the moving average, going all-time high. But however, when you look at RSI, right, you can simply say that when the market try to form the new high, the RSI doesn't show that. All right, it shows the other way around. So that is actually significant sign showing that the market is slowing down when you look at RSI perspective. So can you see here? It's all-time high. It's all-time high. But then here is all-time low at the below. So this is what actually there's some sign showing that the market is going to come down, is going to be weak at the moment. All right, so if let's say you have been longing all-time high here, right, then you might be neglected on this kind of technical perspective. All right, so where are we looking at right now? We can see that actually 30,000 is where after the since before the COVID in 2020, and then right now market recover all the way high, but I'm not seeing that the market will drop to 30,000 immediately or straight away. But I can see that like what they say that like what the news say that the Fed will continue to dominate the market in the weeks ahead after the sell-off. That means there might be more sell-off coming up. And then we are looking at 32,000 whole figure for the next target first. All right. So right now it's being supported by the 100-day moving average, and we will see will it break it through and then go to the 32,000. And not only that, if we change it to 200-day, we shall see does it coincide with that or not. Right, so coincide. So where does it coincide? After it break, if let's say it go to 32,000 and it break, right, we are looking at 31,000, whereby it's actually the 23% Fibonacci. All right, pullback 23% Fibonacci. So this is what we are looking at. But in the first place, it's 32,000. All right, so this is the view for Dow Jones Index. Next, we are looking at Nasdaq. For Nasdaq, all right, Nasdaq after all is good because it's showing an ascending triangle pattern. All right, ascending triangle patterns. But the thing is that right now on last Friday, it the good thing is that it didn't close below the resistance level. All right, it's still being supported. Here's used to be a resistance. Right now it's turned support. All right, it never closed. But right now we are looking at this few candle. If the coming weeks it continue to go down below the previous resistance, which right now turn support, continue to go down, we are looking around this area, this shaded area. All right, whether will it continue to play out, or if let's say it drop below, then this ascending triangle will be neglected. All right, then we will see the first support area will be around this 100-day moving average. All right, so this is what we are looking at, this 200-day moving average, so sorry to say. All right, so in RSI's perspective, it's not like Dow Jones. It didn't show you the conversion. All right, it didn't show you that so-called significant conversion. All right, so we are looking at what will be the price action for the next week itself. Okay, so next we are looking at dollar. So for dollar wise, right, this is what I have been drawing since previously. Let's take a look at the weekly chart. So dollar, I said already is supported by 89 here. Is a good time for you to long. If you have been riding it, then it's considered good for you. So right now they are, like I say, interest rate hike will be strength to the dollar itself. All right, so you can see all the forex trader out there. You can see that dollar, most of the pair is actually uh in the favor of them for the dollar itself. So right now we are looking at the first support, first resistance at 93, and then next we are looking at 94.5. This view never still stand on. All right, although it has been like a month ago, but I still continue with my view on the dollar itself will be strengthened, and it comes just nice with the index hike. All right, of the news from the Fed itself. Next, we are be looking at uh, one of the index which it seems like a laggard, but will it be a laggard? I'm not sure. But after all, you can do if you think it's a good risk to reward, then you can actually nimble it. But it's a counter trend, like I say. Right now, for Nikkei, right, it has not dropped like what happened to the European market, to the US market. All right, this is the Asian market. All right, first of all, we can see some small red candle in the first place. All right, and then if let's say the whole market is being bearish, not very showing a good sign, I'm looking at the first support area will be at this 27,300. All right, just nice for this 200-day moving average to be flow in. All right, 200-day moving average to flow in. So I'm looking at this area. This is for Nikkei. All right, this is for Nikkei. And then next thing, gold. So I say that It's not good for commodity, right? But it's also not good for gold. Why it's not good for gold? Uh, Very obvious. When the interest rate hike, gold has been dropping crazily over the past 5 days. Why? It's very obvious question. First of all, gold don't bring you any interest, right? Gold don't bring you any interest. But if let's say interest rate is going to hike, you will use your money to buy gold, or you put your money into the bank to earn the interest, right? So it's very simple questions, right? Simple answer here. So that's why it causes the gold to drop, because gold used to be a hedging tools, right? So right now, this is what I said previously lah. This is what I said previously and what I charted previously before I go for my exam, and then it actually hit my target area. So right now it actually came down. First support is actually this ascending channel, and then if let's say it fail, right, I actually looking it to reach back on the low of around March 2021, which is around 1670. This is what I'm looking at. All right, so for gold wise, definitely if let's say people think that interest rate is going to hike temporarily, it might actually come down to 1670. But if you want to chase the market where the market opened on Monday itself, please be aware, because on last week is actually quite considered a huge drop. There might be a consider some bounce before it actually came down again. So look for a better entry price to short if you think that there's a change in the gold perspective. Ultimately, it's still at an uptrend. All right, ultimately it's still at an uptrend. So that's my view for gold. Okay, that's my view for gold. Next, we are looking at copper. So you see what happens when China came in, when interest rate high. All right, so copper has been dropping. We can see from the weekly chart, all right, a larger time frame. Can you see that one red bearish candle bar? All right, one red bearish candle bar. So where are we looking at? If let's say we talk about this is a so-called retracement, then you can actually use a Fibonacci, and then you can see that the first target, it cut off the first Fibo. We are looking at 61.8%. Will it reach here or not? This is our first target. All right, this is just nice. Let's see, is there any support and resistance line here? All right, it's just nice. Some of the resistance level, can you see that? So it's quite significant when it come down to $3.85. All right, so this is the next thing we are looking at for copper. All right, RSI is showing some sign, it's coming down. You can see here. Okay, break below. Right, if everything is trend nicely, but this uphill is quite scary after all. All right, it should remain, but right now it came down. Okay, so this is what we are looking at for copper. Okay, let's see next. We are looking at, all right, so and not only that, right, there is also, you can look at the ETF for the material XLB. This is a material ETF. Material ETF is like copper, steel, all this, right? Actually came down lah. So if let's say the ETF came down, it means that the futures came down. ETF came down means that the stocks for the related company will also be not doing well as well. So today I'm going to introduce one of the shares for this video. It's mainly called material crops. All right, before I show you the chart, please remember to subscribe my video, to like my Facebook page, and also to join my Telegram as well, so I'll be sharing more from there as well. So this is the counter which I'm looking at, MP Material Corps. All right, so what happened to this? This is also under so-called the material sector, under the material sector. This is the weekly chart, and right now we are looking at the daily chart. All right, for the day chart, we can see that it's being supported by the 100-day moving average. It's trading below. Right now, it's trading within the range itself. 100-day, 200-day, 100-day, 200-day. All right, if let's say the market is, the material is coming down, ETF is coming down, there's overprice of the commodities, and this might be one of the greater chance with a good risk reward for you to short it down. All right, and then the first target will be whether this 200-day will be supported. All right, if let's say it closed below this previous low, this is where the elephant will actually all rush out. All right, okay, so this is what we are looking at. Of course, entry target, stop loss, take profit will be given for those private subscriber, right? So for public subscriber, you guys will know what is in my watch list at this point of time. All right, it's actually MP Material Corps. Next counter is somehow non-related to what happened. It's just that I think there's a good risk reward. It's actually called Huya. This company is a live streaming company. can take a look. Right now it's trading at the bottom of the price since December 2018. All right, so this is a good risk reward. That's why I just want to touch on it. It's just a good risk reward to enter. All right, you can also put into your watch list. This is what I've been doing, as been looking at it previously lah. So it hit my TP, and then right now I'm revisit this counter once again. Okay, so there's just a very simple watch in my watch list. Okay, let me remove all this unnecessary. All right, so that's all for these two watch list to be added, to be monitored for this coming week. So hopefully you guys enjoy my video and have some update what happened on the last week and what happened to the market currently. All right, so remember to follow me, stay tuned. I will see you guys next week again. Thank you. Bye bye.